Hey everybody, welcome to the second episode of the video series, and today I talk about Google. You can see that in 2023, Google was maybe the fourth most valuable company in the world. Today, Google is the second most valuable company in the world. And the question is, will Google become the most valuable? The purpose of today's video is to try to share some more information about the company so you can make this judgment yourself. Many of you know that in 2025, my biggest position was Google. I owned around 30% of my entire portfolio in Google. I went to Estonian media where I said that my biggest position is Google and my second biggest position is Rocket Lab. Since that news came out, Google is up 40% and Rocket Lab is up 100%. So sometimes it is worthwhile to read about my portfolio. But before we go into the actual financials and my contrarian investment take, let's see what the experts were saying about Google in the beginning of 2025. Gene Munster says the following.
Very complex set of challenges that's ahead of Google, and this golden goose that they have is showing its age.
So Gene Munster went so far as to say that Google is the next eBay. eBay being a famous case of a really famous company with a big market share slowly dying into oblivion. Of course, I knew that Google is much more than that. I mean, Google has 3 billion devices on Android. They have billions of daily active users on YouTube, on Gmail, and many of their applications. They own Waymo, what is still most advanced self-driving startup in the world. They own 8% of SpaceX, Anthropic. They build semiconductors for Amazon. This is really a conglomerate, what is growing really, really fast. Really often, journalists want to sell you newspapers and they have doom and gloom headings. You gotta look deeper than that and take your own position. Just to show you some of the applications they have the calendar, they have Google Chrome, one of the most used browsers in the world. They have Google TV, Photos, Google Meet. Many of these applications are being used by billions of people around the world. So Google is not just a software company, they are the internet and they own the internet. If you look at Gemini's market share, of course in the beginning they had a first mover advantage. Everybody thought that Google will die. And in the beginning they indeed looked like they're gonna win the race. As you can see in the last 3-4 months, Gemini is slowly but gradually taking market share away. They are already so successful that even Sam Altman said it's cold red in OpenAI. You might ask, why is Gemini taking market share? There is really 2 reasons for this. Number 1, DeepMind team. Number 2, distribution. It's going to be extremely difficult for OpenAI team to beat Google. Only in terms of fundraising, OpenAI needs to fundraise massive amounts of money, whereas Google can just use their cash flows. But let's look at more deeply into the financials. Let's look at the investment philosophy, what I have when investing in growth companies. It's very important distinction when you invest in companies with very high tangible assets and when you invest in growth companies like Google, what are software companies mainly. So what do I look when I invest in growth companies? I want them to be constantly increasing revenue, net profit, and free cash flow. I want them to have a positive growth rate going into the future. I want them to have a sustainable competitive advantage, to be operationally efficient, have conservative debt, and when I personally calculate intrinsic value, I want this to be much higher than the current share price. So let's start from the last one. When I calculated intrinsic value in the beginning of 2025, it was around 250, whereas it was trading 150. They have very conservative debt. Their ROE, so return on equity, is around 30%, whereas I'm already happy when it's 12 or 15%. Most companies are lucky if they have one sustainable competitive advantage, whether economies of scale, switching costs, brand, and so on. Google has many of them. It's a conglomerate. They're growing really fast. They have a very strong moat. If you look at their past growth rates, for example from Guru Focus, you can see that their revenue has increased around 20% in the last year, the average of the last 5 years, and the average of the last 10 years. Their earnings per share have increased around 30% in the last 5 years. These are extremely strong numbers. These numbers show that Google has a very, very strong moat. And when the company was trading around 20 price earnings, that was the point where I pushed the trigger. You could get the really high quality business what is growing really fast, very consistently, with a very reasonable valuation. There is one additional catalyst for Google. Especially if you're investing in growth companies, then interest rates play a very important role in the price discovery. The lower the interest rates, normally the higher the share price. Let me play you a clip what is happening in US right now with the Fed chair and Trump.
Or he's crooked. I don't know what he is, but he doesn't do a very good job.
After his term as chairman ends in May.
So in May, Powell's term ends, and you can see there's a lot of drama happening between them. Of course, when somebody really dovish will be next Fed chair, then stock market might rally, and of course this might also impact Google's share price. To summarize, I showed you about Google as a company, how they went through difficult times, how they persevered. I showed about the financials of Google. I gave my opinion why Google is one of the top positions in my portfolio. Now the question is, will they become the most valuable company in the world? And the answer is, I don't know. But based on today's video, you can make your own assessment. I personally think the value will now accrue not on the semiconductor stocks, but on the application layer. But hey, that's only my opinion. Thank you so much for watching this episode, and see you in the next one. Ciao!